Let's look at the gold price now. You're calling for higher prices within a 3-year time frame here, but many would say, why don't we have gold higher right now? Look at the world we're living in right now with North Korea, all this uncertainty that surrounds the metal. Why isn't it at 1900 or 2000?
I think that one of the reasons is that we have those uncertainties and the gold price hasn't risen. And it's sort of a self-fulfilling prophecy. You have any number of people who historically bought gold because they thought the world was going to collapse, or the Treasury or the European Central Bank were going to collapse. And after 10, 20, 40 years, they're giving up the ghost. And one of the things we've seen over the first part of the first 8 months of 2017 is a lot of these investors who bought gold based on a fear of global calamity are selling their gold and saying, it just hasn't happened, and whoever I've been listening to probably has a wrong model, or they're dying and their heirs are selling their gold.
So a lot of people are just fed up saying, look, this, the end of the world, it seems like it is happening, and gold's not rallying to, 5,000, 10,000.
The fact of the matter is you have enormous financial problems. You have a lot of the same problems that caused 2008, 2009 that have gotten worse. You have new problems that have emerged since the global financial crisis. You have massive economic disequilibria. You are overdue for a recession in the United States. And you have all sorts of political problems, from North Korea and the United States to the continued dysfunctionality of the U.S. government. And in that environment, the collective wisdom of financial markets values gold at 1350. And so that's the new reality. And you can say, well, is this in fact the peak? Does this include the risk premia that we will see? And our view is that it includes the risk premia as it exists today, but over the next 3 to 5 years, we expect things to get even worse economically and politically, and that risk premium to rise.
And Jeff, as you know, there's a group of people who would say, well, it's just simply because gold prices are manipulated down.
That's just, I don't even need to respond to that. It's such nonsense.
Why?
It's just nonsense. I mean, to say that gold prices are manipulated, there's no evidence of it. I mean, what we found is, a couple traders on a couple banks were diddling around on the fixes. You've found no evidence of any grand manipulation. You've found no evidence of any grand conspiracy. You've found ample evidence that those things don't exist. The gold market moves in tandem with silver, other commodities, and financial markets. It has the same sorts of volatilities that you see in those markets. The downdrafts and the updrift spikes that you see are very similar to things that you see in the other market. The gold guys, the gold conspiracy people, look only at gold and say, oh my God, gold prices fell $10 or $15. They ignore the fact that, gold prices rose $20 the day before, and that must be a manipulation. But they don't look at the fact that that kind of volatility now exists across financial markets, and it's the result of programmed trading using computer-generated buy and sell signals. So if you look at, for example, the gold market, and you look at these down dips and the upshots spikes, because in fact over the last couple of years there have been more abnormal upward spikes in prices than there have been abnormal downward spikes in prices in gold and in silver, because they've now starting to re-enter a bull market. But if you look at the trading patterns in the spikes down and the spikes up, what you find is it's not an individual company or trader making a single trade. It's hundreds or thousands of computers looking at the same price chart, looking at the same price point and saying, now's the time to buy or sell.
But Jeff, the counter argument to this would be, well, we're seeing so many court cases now emerge in terms of silver manipulation, gold manipulation suits. So people say, well, that's proof enough that there's something fishy going on here.
No, it's proof enough that there are a lot of people who have lost money because they were long and wrong, and they refuse to believe that they could be that ignorant to be wrong and long at the right time, and rather than blame themselves and their own poor analysis of the world around them, they would rather blame some conspiracy.
Okay, last point here when we're talking gold prices, physical demand, we're seeing money just flowing into the GLD, but how about on the physical side of things? Are we seeing demand here?
We're seeing spotty demand. As I said earlier, you've got a lot of the long-term investors who seem to be backing away from the market. So you have very weak demand in some segments of the physical market for coins and bars, the United States, Canada, some parts of Europe, some parts of Asia. But you're also seeing the emergence of new investors. A lot of those investors are short-term opportunistic. A lot of them are diversified investors. They feel much more comfortable with the ETFs than they do with physical metal. It's easier to buy and sell, so if you're shorter-term opportunistic, you can get in and out more cheaply and more easily. Or if you're a long-term investor, it's easier to buy and hold that way. So you are seeing some new entrants, which is one of the factors behind our view that the gold price is going to rise over the next 3 to 5 years. But you're also seeing the diminution of demand from those long-term old guard people.
Jeff Christian, Managing Director for CPM Group, thanks so much for joining us today.
Always a pleasure.
Hey!